Have you ever wondered how to raise capital for a real estate fund? What is a fund, and how can you start leveraging one to bust into bigger deals? All that and more coming up. Hey there, my name is Mike Fritz. I'm the founder of Titanium Capital Investments in the multifamily CEO system. My passion is to help people just like you create financial freedom with multifamily real estate. In this video, I'm going to walk you through how you can create a real estate fund so you can start knocking down bigger and bigger real estate deals. But also make sure you stick around to the end because I'm going to give you a tip at the end that'll keep you out of jail. The first thing you have to understand when creating a fund is what actually is a real estate fund. It's a term used by the S.E.C, or the Security and Exchange Commission, for a fund we create where we pool investors' money and invest a pool of investor money into one specific deal, usually investing in a deal together that not one of us could do on our own. The reason the S.E.C gets involved is when we create a fund, we are selling a security to an investor. And when we sell a security to anybody, the S.E.C likes to come in and make sure we're doing that correctly so that we're not taking advantage of people. The first thing you want to do is choose your fund. There are two main funds inside of the S.E.C Regulation D that you can create in order to invest in real estate deals. The first fund is a 506B fund. A 506B fund allows you to accept money from non-accredited investors, meaning you can accept money from people that don't meet the qualification of an accredited investor. A side note, accredited investor is somebody who makes $200,000 a year, or is a $300,000 a year household, or has a net worth of $1 million. A 506B fund allows you to accept money and invest it in real estate from people that don't meet that accreditation standard. The second thing you need to know about a 506B fund is you have to have a pre-existing substantive relationship with anybody you accept money from. For example, if you're going to take money into your fund and invest it in real estate, you have to have a relationship with that person beforehand. My attorney tells me that it's good to have at least 3 meetings with somebody before you ever present a deal to them to give time to actually build a relationship with somebody before you accept their money. But just so you know, I'm not an attorney, nor do I play one on TV, so make sure that you consult your own attorney to make sure you're within these guidelines. And because you need a pre-existing substantive relationship with the people that invest in your deals, a 506B fund does not allow for general solicitation. For example, if you have a deal you put under contract, it is illegal for you to post it on Facebook and say, hey, does anybody else want to invest in this deal? According to the S.E.C, that would be an illegal form of marketing a fund. You can only accept money from people you have a pre-existing substantive relationship with. You have to have a relationship with them before you ever present a deal to them that they could invest in. With a 506B fund, you can also only accept 35 non-accredited investors per deal. That means if you need more than 35 investors for a deal, the rest of them must be accredited investors. However, I must note this as well. Just because they're not accredited, the S.E.C still requires they be sophisticated investors. Now, what is a sophisticated investor? A sophisticated investor is very fuzzy when you really dig into the explanation. But essentially, the S.E.C wants people to understand real estate before they invest in your deal. So they want to make sure they've either invested in real estate before, they have knowledge of real estate, they understand the market, they really understand what they're getting into before they step forward. So the way I do that is I meet with them, I educate them on the market, I educate them on the kind of investment, and I make sure they understand what we're actually doing every single step of the way. And I video all those calls and record them to make sure I have them on file. So every time I talk with an investor and I'm sharing with the market, I'm seeking to add sophistication to them so that if anything ever came back on me, I have those recordings to make sure they know it was all clearly communicated. The next fund is a 506C fund. In 2012, the S.E.C instituted what is called a 506C fund, which allows you to generally market your deals. Finally, us investors were able to just post a deal on Facebook and say anybody who wants to invest can invest. We were so excited. However, the 506C fund has a couple stipulations. One of them is you can only accept accredited investors in your deals. So if you're going to generally solicit a project and accept money, they must be accredited investors. Again, they must have an income of $200,000, a household income of $300,000, or a net worth of $1 million in order to invest in your deal. Another big difference of the 506c fund is their accreditation as an investor has to be verified through a third-party verification company. What that means is you actually have to hire a company that can verify they're actually accredited. They check their income, they check their net worth to make sure they're not just saying, yes, I'm accredited, investing when they're not really an accredited investor. In a 506b fund, you can actually take their word for it. As you come down into a C fund, you have to make sure they get verified through a third-party verification company. But the power of a 506c fund is we can finally market. You can create Facebook ads. You can market it to everybody. You can start speaking and you can share it on your YouTube channels and share it everywhere on your podcast. You can share any deal you have with anybody and scream it from the rooftops. That's the power of the 506c fund. However, again, it does limit the kind of investors you can accept. Before I get on to the next tip, throw a comment in the comment section of which fund you would do. If you were going to raise money and create a fund, which one appeals to you more and which one would you do to invest in your next real estate deal? And also, if you have any questions, throw them down in the comments. We love answering questions from our listeners. Because often I'm on this side of the screen, I want to know who's on that side. So please drop a comment down below. Let me get to know you, what you're doing, and tell me which fund you would use. The next thing you do to create a real estate fund is to hire an S.E.C attorney. An S.E.C attorney will understand all of the stipulations and make sure you are doing it according to the S.E.C guidelines. I cannot emphasize enough the importance of having an S.E.C attorney on your team before you ever raise money for a fund. While the S.E.C may be really targeting the bigger investors and not the newbies, you want to do this right from the start. Because if you get off on the wrong foot with the S.E.C, you could have a mark on your back for a very long time. Please make sure you hire an S.E.C attorney. They'll help create the fund for you. They'll create all the documentation you need, and they'll make sure the deal happens the right way legally to make sure you can keep doing real estate deals. Also, when you create a fund, there's a legal document between you and your investors that is created called a PPM, or a Private Placement Memorandum. That Private Placement Memorandum is basically the contract for this entire transaction. That contract is not cheap. It costs anywhere from $10,000 to $20,000 depending on the attorney you leverage. But again, that makes sure everything is done right and everything is done legally. You want to make sure you have an attorney draw this document up for you. Many of these documents are anywhere from 60 to 200 pages. That's why they're so expensive to create, but you can't create a fund without one, so make sure you leverage an S.E.C attorney. Now that we have all the legal and creation stuff behind us, now how do we actually move forward and create the fund and do the deal? Well, the next thing you do is, let's get a deal. We got to find a deal in order to raise money for. Because again, like I've mentioned in other videos that you need to watch, if you haven't watched our other video on raising private capital for real estate development and commercial deals, make sure you hit those cards immediately. As you locate a deal, there's two big things you need to know. Make sure you're obviously leveraging real estate broker relationships, because broker relationships are really where the powerful deals are found and done. But also, as you're looking for deals, make sure you have a powerful underwriting process, because I'm telling you, without a powerful underwriting process, you are not going to be able to take a good deal, find a good deal, and actually present a good deal to your investors. You may present a deal you think is great, but in fact, it actually loses money. Make sure you have a solid underwriting process to see, is this deal really worth our time and money? The last thing you do after you've found that deal is create your pitch for your investors. Now you can start creating your pitch, and now you can start talking to people about it. And how you talk to people about it, of course, is dependent on which fund you choose. If you choose the 506b fund, which by the way is the most popular fund, if you choose a 506b fund, you can only speak to people you already have a relationship with. If you do a 506c fund, you can only actually present it to accredited investors, but you can generally market the project. So if you get somebody interested that's not an accredited investor, you have to graciously say, this project is only for accredited investors, but we may have some 506b funds that are coming your way very soon. As you create your pitch to your investors, you want to remember they're asking one question: how much money am I going to make? Keep it really simple. You want to show pictures of the project, not only pictures of the project that show its current state, but pictures of where you want to take the property. You also want to show demographic area. How is that area doing? Is the population growing? Is it declining? Are there jobs moving there? Is Tesla about to build a new plant right outside that city? Or is Amazon building another distribution center right there? Who is moving in the area that's going to create jobs and that's going to make this a good place to invest? And then, of course, as mentioned earlier, share the kind of return you're expecting that your investors are going to get. Here, I always am very conservative. I like to underpromise and overdeliver. If I can win their money on an underpromise, I can wow them with overdelivery. Not only are they going to invest with me over and over and over again, they're going to tell all their friends about me, and I'm going to have more money than I know what to do with. Now I want to give you a tip that's going to make sure you keep out of jail. I told you if you're going to do a 506B fund, you need to have a pre-existing substantive relationship with the people in which you accept money. Make sure you track communications for new people you meet. When you meet somebody, put the date you met them. If you do a Zoom call with somebody, either record that and put it in the cloud, or put that in some sort of document that you can find it quickly and prove the times in which you met and what you talked about on those calls. You want to be able to show the SEC, if anybody ever came back on you, that you actually did know this person, you talked to them about the investing, and here's how the whole project was put together and what interests them about the project. But by tracking your communication with them and creating essentially a documented history of your relationship, make sure people know you're the real deal. Because if you take money from somebody that you don't have a relationship with and they come back on you, it could go very, very badly for you and your real estate career could be over. I don't want to see that happen to you. So make sure you stick inside these guidelines, get an attorney, and do it the right way. I also want to give you a free tip today for tuning in. I want to give you our free ebook on the 7 tips to analyze a deal properly. If you're going to create a fund, you need to know how to analyze a deal to know what to sell to investors that are actually going to make money. Down below, click the link and you can get our ebook on how to actually analyze a deal. I'll see you in the next video.